Hey traders, Michael or 𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Monday, August 18th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had an amazing day of sitting in front of a wall watching paint dry. She's down 14 cents, 0.02%, pretty much a rounding error. I mean, just take a look at this volume. Pretty much nothing. Nada. We had a whopping $2 range today, and we did manage to nail low of day and high of day. How you doing? We'll get into that when we go over inside the numbers. But for now, it's safe to say she's just eating time off the clock. Let's go ahead and take a look at the hourly chart, and you'll notice a little bullish flaggish pattern forming. Here's the flagpole, and then you got the actual flag itself, eating time off the clock and building energy for another move higher. So let's go back to the daily chart and take a look at this area right here on the chart. This is the last 4 trading days, and one thing I want to point out is that we did make a new low today compared to these last few days. But remember, it's about how you close them. It's one of the most important things we need to take note when going over technical analysis. The market decided to stop at that specific area or number for a reason. Nothing happens on accident. There's no accidents or coincidences. Everything happens for a reason. It applies to the market. It applies to real life. So we'll take note that she did make a new low today, but she didn't close at the low. She actually closed above the most recent breakup candle low. As long as we're staying above this level right here, she's in a more bullish spot, eating time off the clock and building up energy for another move higher. She's going to retest the most recent breakdown candle high, and then she's going to want to push towards new all-time highs. And if that is the case, we're going to have the numbers hot and ready for when we enter that uncharted territory. But for now, staying above this level and closing candles above is important. We'll call it the bogey. But we are the umpires calling balls and strikes, getting below this area and closing candles below. She's going to want to start working on this big-time breakup candle low, possibly getting down to the 20-period moving average. That is home base. She can stop a little bit before. You got this big time breakdown candle high that comes in at around 639.80, give or take. The actual high is 639.85. Breakdown candle highs are important as overhead resistance, but they're also important as support coming back down. So we'll also note that as an important area. So you have this number right here, and then you also have the low of the breakup candle, coinciding with the 20-period moving average. Just taking a fib tool and attaching it to this low, to the most recent all-time high, we can see that both of those numbers coincide with the 25% retrace and the 382 retrace. The 382 is a little bit lower, but it's in the vicinity. You get the point. We're trying to find different reasons to build the full stack. We're finding the puzzle pieces and putting it all together to understand the bigger picture of what the most likely next move Mrs. Market wants to do. There's really no major events this week. You got a few pieces of data here and there, but nothing that really stands out. And then the best thing that I could think of this week is really Trump talking to Zelensky. But that doesn't really matter, because if it was important, then the market would be moving more, because it feels like Trump and Zelensky talk every few weeks. So really, there's nothing going on. So we could definitely expect eating some time off the clock this week. But that's not to say we are near some key important levels. You got the bogey right here, and then you got some areas of support down below. Staying above these levels is the bull case scenario for another move higher. But if we start closing candles below, then things start to change. Let's go ahead and shift gears and talk about inside the numbers, starting with the 0 dark 30 stuff. And although it was a very boring day, a very small range today, we did manage to nail the frickin' numbers. You ready for this? This is all we need. The morning pivot, 642.25. Above the pivot, she's bullish, and the first number of overhead resistance is 643.80. Oh my days. I mean, come on, it doesn't really get any better than this. Pretty much low of day and high of day. First target that was reached was 643.80. And take a look, right here, the high, 643.80 to the frickin' penny. Traders took that as a short opportunity, and she gave you a stand-up double pretty fast, with absolutely zero heat. And then we came back to retest it, spiked it a little. That's an infamous spike the high and rip it back down in the other direction. And then where'd she almost make her way to? 642.25. Came up a few pennies short. She did manage to hit it later on in the day. This was closer to the afternoon. The low right here, 642.18, spiked it by 7 cents. And then where'd she rip it right back up to? 643.80. I mean, you could literally see that these numbers were just ping-ponging right back and forth to each other. Very small range today, but just because we have small ranges and low volatility doesn't mean we can't pull some trades off. I mean, who else just gives you the numbers on the freaking dot? These numbers were laid out to you well before the morning bell. At 0 dark 30, traders were prepared, we had a game plan, we had execution, and we had money made. How you doing? So 642.25 was the pivot of the day. Originally, when I wrote the 0 dark 30 notes, I put up a bull and a bear pivot today, but just for simplicity's sake, I went with only one pivot. That was 642.25, but these were both pivot numbers. And it's important to note that we had some institutional participation at the end of the day, closing below what was originally the bull pivot, 643.80. Just look at the volume at the last 5 minutes of the day. This isn't unusual activity. This is essentially the market telling us this is the place it wants to close. There's no accidents or coincidences it closed below the bull pivot today. Now, it doesn't mean we can't get back above it tomorrow, but it's just important to know that she made a choice to close below. She spiked it by a bit above and then made her decision to come back down for a reason. What that reason is, we don't know, we don't care. We just take it at face value and use it as a puzzle piece information to put pieces of the puzzle together to get the best idea of where the market is most likely to go. And remember, closing below this number, 642.25, a number we brought up earlier, is important. It is the bogey. If she closes below, she's going to want to work on this big time breakup candle low, also possibly reaching this breakdown candle high. Pause the video, read the notes, and go back to the chart to double check the work. It's all in here: the morning game plan, intraday updates, the wrap up at the end of the morning session so that you're prepared if you want to trade the afternoon session. It's not something that we usually recommend, as we know the afternoon is a different type of take. It's another component of variable risk that we try to eliminate. But if you're looking for an edge in the market, if you're looking for an exact game plan to help you before the morning session even opens, inside the numbers/live room is where it's at. We have an opportunity around the corner for everybody. It's not just the S&P. We got the Qs, IWM, gold, Bitcoin, crude, natural gas, stocks. We got something for everybody. Going into the other markets, we're going to skip around and head to XLF first. She's up 0.08%. She's up 4 cents, pretty much nothing. But what's important to note is that we had an overhead resistance zone, 53.10 to 53.44. These were numbers that I gave to you in the video. And what'd she do? She made a high of 53.16, spiked it by 6 cents, and then immediately rejected. Where to? The unfinished business at this gap at 52.46. As you could see, we came up short earlier in the week, and then we finally managed to complete the unfinished business on Friday. So getting below 52.46, she's going to want to start making her way down to this breakup candle low. And then not to mention, you have this breakdown candle high. She can use it as support. It's not the actual high. The actual high comes in at 52.25. She managed to come up short. So this is a first time, best time situation. But remember, it doesn't always have to be the exact high of a breakdown candle or the exact low of a break up candle. It's around 20% in that vicinity. So she can definitely use this as support. Anywhere from 52.25 to this low right here at 52.05. And that's kind of the zone that we have for XLF. Getting below, you got this gap right here. But this is an important area. So we could get rid of these numbers up above. We know that worked. That was key overhead resistance. And now she's making her way down to key support. It's probably a good idea to put the moving averages on the board. As you could see on Friday, not only did she complete the unfinished business down below, but she managed to stop right at the 20-period moving average. And now what did she do today? She spiked it, but managed to close above. That's some puzzle piece information that we'll put in our back pocket. If you shorted that zone, this would have been the area to take profit. You had the unfinished business, you had the 20-period moving average. So staying above these key areas and the 20-period moving average is the bull case scenario. She's going to want to make her way back up to the most recent breakdown candle high. If we start getting below, the next destination becomes this breakup candle low that happens to coincide with the 50-period moving average. and that's what we got for XLF. What about 𝐾AMP-IWM, my number one favorite market leading indicator? She's up 0.37%, very small range today, inside day. She managed to come up short of the overhead resistance zone that we had, so we could go with the first time best time principle, looking for a possible spike of 232.24, possibly getting to the back end of the overhead resistance zone. But what she's doing is essentially eating time off the clock and recocking the gun for another move, possibly another move higher. We do have a bullish flaggish pattern again, very similar to what we have in the spiders, but the next few days she could really just eat time off the clock until she's ready to unleash the chamber. So we know what lays ahead on the upside, but what about the downside? Well, she has to take out these lows before she wants to make any move down lower, and then where's the next destination that she's going to go? Well, she's going to work on this breakup candle low and then the 20 period moving average. Right here in this vicinity is a key support zone. You got the 20 period moving average, you have this breakdown candle high, and then you also have this breakup candle low. Not to mention you have this unfilled gap with the 50 period moving average creeping upon it. So everything in this vicinity is important. We'll put some numbers up on the board just so you could get a better sense of what's going on down below. You got this breakdown candle high that coincides with the 20 period moving average. That is the front end of the zone. Then you have this unfilled gap with the 50 period moving average creeping upon it. That is the back end of the zone. And then we got a midpoint phenomenon number right around right here that coincides with this big time breakup candle low. It's a bigger candle than everything that we see on the screen in front of us at present. So you bet that this zone is going to be key support. It's important. The market made a high right here for a reason. The market made a low right here for a reason. The market made an unfilled gap right here for a reason. Everything in the market happens for a reason. We don't need to know the reason, but we can certainly use it to our advantage to make money and create successful trade setups. So that's what we got for 𝐾AMP-IWM. Alright, so what about the folks at the transportation department? She's up 0.09%. So we got the SPY down on the day. I mean, pretty much flat, but technically down. We got the Qs down as well. We'll get into that in a moment. But then we have my two favorite market leading indicators up on the day. It's not by much, but they are up. That's some puzzle piece information. We also have the convergence of the 200 period and 50 period moving average. So we'll see if that's going to be important. It's right in the vicinity of the most recent breakup candle low, and that comes in at around 15,550 give or take. Also, just like IWM, she did come up a bit short of the overhead resistance number that we had on the board. So if we're eating time off the clock for another move higher, that is the first destination on the board, possibly even a spike of the number since we did come up a bit short. So we have this number that's going to be important, and then I'm also going to throw some other numbers at you for the transportation department. So if this number doesn't stick, the convergence between the 250 period moving average, the next set of numbers on the board come in at 15,362 and 15,262. These are mathematical numbers, they're important, they're magnetic, and that will be the next destination if we get below right here, at the convergence. But it's important to note that we do have a bullish flag setting up, a lot of bullish flags across the market, building up energy for another move higher, but we are the umpires calling balls and strikes. Nothing is 100% certain in the market. Just because we have a bull flag scenario doesn't mean she has to 100% go up. Nothing is 100% in the market, which is why we need to look at both sides of the tape. What about the Q people? She's down 0.04%, down 23 cents, pretty much nothing. And we talked about a number on Thursday. That number was this big time breakdown candle high, and it's important because it's the biggest one that we see out of this picture right here. Obviously there's bigger candles back in time, but we're just going to focus on the more recent picture. Just taking it at face value, this is important. She did find resistance at this number, so you bet it's going to be important when it comes back down. But take note that she did come up short of the number. First time, best time situation. But we are using this number as the bogey. So staying above 574.54 is the bull case scenario. Getting below, she's going to want to make her way down to the 20 period moving average. So we are in a lot of similar spots between the markets, eating time off the clock. Again, there's nothing really of key importance going on this week, so we could expect some more eating time off the clock before she decides which direction she wants to go to. She's building up energy, aka recocking the shoddy, and we'll see where she wants to go. But again, across multiple markets, she's teetering around important numbers. Closing below, the tape starts to change a bit. For example, getting below 574.54, we become in a slightly bearish position, wanting to go run a test of some lower numbers. Taking a look at the weekly chart, we can see that if we close below, she's going to want to work her way down to this most recent breakup candle low. So possibly even a spike of the 20 period moving average getting down to around this area. And I'll throw out a number for you guys, so get your sticky notes out. That number comes in at 558.83. We're nowhere near that number, but it's something to just keep in your back pocket. Alright, so last but not least, we got SMH shaking my head, the semiconductors, smash mouth. She's up 0.41%, still above all the moving averages and closing candles above, so the trend is your friend. And we talked about an important number in the last video. That number came in at 297.38, and we opened below the number. We made a high of 297.19, and we managed to slightly close beneath it. Closing candles below this number, she's more likely than not to go run a test of the 20 period moving average, home base. If she's above, then she starts to work at the all-time highs. Nothing really important to talk about SMH. She's teetering at an important level along with other markets, such as the spiders, IWM, the Qs. So we got a lot of similar situations going around across the board. We do have a long week ahead of us. We'll see if she wants to eat some more time off the clock, which is most likely the case, but we'll see later on in the week if she wants to make her move. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. Don't forget to like and comment as it helps the channel out. That would be greatly appreciated. And with that said, I'm 𝐼𝐴𝐿. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. We're going to pull the ripcord for today, but we'll be back ready to go in uniform for tomorrow's session and the video later that night. Enjoy the rest of the day, folks, and take care now.